Traders thought they'd seen it all, but the pound has continued to whipsaw as Brexit deadlines come and go, tracking every political twist and turn. Yet the underlying driver for sterling should be the UK economy. Could it bounce back once the Brexit cloud lifts? And Chancellor Sajid Javid probably wants a spending spree to boost economic growth, but he might not have time before an election. How should investors behave with all that going on? Let's ask our cool heads.
We will be leaving the EU.
America is winning again.
Today, we decided to lower interest rates.
Do not raise this time.
Hello and welcome to this episode of Cool Heads, the show that cuts through political noise to focus on what matters most to investors. In a minute, I'll be speaking to portfolio manager Tim Foster. But first, let's turn to Charlotte Harrington from our multi-asset team to talk us through what's been happening to the pound. Hello, Charlotte.
Good morning.
So it seems like the pound has been all over the place since the referendum and particularly in the last couple of weeks. What's been going on?
Yes, I think structurally volatility in the currency market has been higher. And if we look at this chart, we can see the implied 1 week volatility, so quite a short-term measure. And you can see you had quite a big spike around the referendum, and then towards the end of this chart here, you can see that we've moved up again, but nowhere near the magnitude of 2016.
But as you say, nothing like the volatility that we had around the referendum. What about the absolute level of the pound? We're off the bottom, $1.20 or so recently. Where do we stand now?
Well, if we look at a long-term chart of sterling versus the dollar, you can see that we're certainly not at the all-time lows. People talked about getting to this sort of level in the event of a no-deal Brexit. It seems like over the last week or so there's a glimmer of hope here that we won't be entering a no-deal Brexit, but obviously still a lot going on. OK, thank you very much, Charlotte.
So, Tim, close to parity back in the 1980s, doesn't feel like we're anywhere near that now. What's your view of sterling?
Well, I think clearly there's going to be no end to the political uncertainty and the volatility that induces. I mean, we're likely to have an election coming up. After that, we'll move into the debate over whether to extend the transition period or not. So political vol is still going to be here for the foreseeable future. But I do think we have to look through that a bit and think a bit more about the fundamental outlook for the economy, really.
Absolutely, yes. I mean, the currency should track the fundamentals. What are your views on the UK economy at the moment?
We're relatively optimistic, actually, on the UK economy, particularly if we think about the situation of the consumer. Consumer confidence is quite low, but the labour market is very, very tight. So if you look at the chart we've got here of participation rate of the UK labour force, so that's the percentage of people of working age who are looking for work or in work, you can see that's at a 60-year high. Obviously, unemployment is very, very low, something like a 40-year low as well on the unemployment rate, and wages have been growing quite nicely as well. So we think that the consumer should be well supported, actually.
So that's quite interesting what you say about wages growing. I wonder what the Bank of England's response might be if wages continue to grow.
Well, I think if we do get this slightly more optimistic, a bit of certainty on Brexit and a slightly more optimistic outcome, then yes, the Bank of England will be tempted to sort of talk up the possibility of hiking. I fear in the slightly longer term, though, this will come against the slowing global backdrop and a backdrop of other central banks kind of still firmly in cutting mode. So I think ultimately the Bank of England will end up cutting with them and following the rest of the trend there.
Now, you're obviously a fixed income portfolio manager, and that negativity, that caution about the global economy is reflected in bond yields at the moment. Where do you see them going from here?
Well, I think ultimately it's hard for gilts to deviate too much from that kind of global pattern. So with global bond yields, we think well supported and possibly going lower from here. We still think it's a good general backdrop actually for all kinds of government bond yields.
Tim, thanks very much. And thank you to both of our cool heads today, Tim Foster and Charlotte Harrington. See you next time when we'll be looking at what's happening to growth and inflation. For now, from Fidelity's London studios, goodbye.